Anybody? Perfect. Worldwide. Thank you. All right, guys. So let's do this. Let's do this. First and foremost, for y'all that don't know me, my name is Jeremy from the Free Minds. I am a full-time day trader and online entrepreneur, and I've been trading funded accounts for about a year now. And I live in Marbella, Spain, South Spain. Quite nice here. I moved here from Sweden, and I can tell you this: I fund my life. I pay my bills. I make a living out of funded accounts. So basically, if it wouldn't be for funded accounts, I wouldn't be able to live where I'm living right now. So that's the power of funded accounts. And in this presentation here, in this webinar, what I'm going to do is I'm going to take it from scratch, from what is a funded account, what is a prop firm, to the most advanced level that I can take it to, with the tips and tricks and gems that will get your trading game up when trading funded accounts. All right. So for y'all that know that already trade funded accounts and know all of that stuff, stick with me and stay to the end, because you're gonna get some gems. And also during while I talk about prop firms and all of that, I think you might get some nice things about from that as well. If you're new to this, have your notepad, have your pen ready, because I recommend you to take notes. Note takers are money makers. Remember that. Remember that. And we're talking about funded accounts, so we're talking about money. So let's start. What is a funded account? So very basically, it's a account that is sub anagreta. It's an account that is funded by somebody else. And in this case, we're talking about prop firms. So we're talking about firms that fund your account. So why does a firm want to fund your account? Well, first and foremost, what is a prop firm? It's short for proprietary trading firm. And to put it very short, it's a company with a lot of money. Instead of investing it into different assets, what they do is they hire traders to trade for them. All right. So back in the days, what used to happen was they used to have a trading floor, and they hired these traders. They had to go through an evaluation process. Sometimes it took months, sometimes years, so that they can prove themselves of being quality traders that could scale the money of the account, right? The money of the company. Nowadays, we live in a digital era, so we don't have to do it that way anymore. We don't have to be all on a trading floor in London or New York, Wall Street, or wherever. What we do now, we do it online, right? So what happened? How it goes through is that you basically go through an evaluation process. You go through a challenge where you prove yourself as a trader. You prove that you can make profits on a consistent basis. And when you do that, they give you the real money to trade with. Now, there are going to be a lot of rules around that. And those rules are loopholes that you have to jump through, and where you easily can actually get beaten or disqualified from the challenge. So it's important to understand those rules. Now, we will go through all of that. First, why a funded account? Well, let's say you have money. Let's say you have a lot of capital. Why would you want to trade a funded account? Well, the thing is like this. Let's say you have $1 million. You can trade it. If you have a firm, if you have a company that offers you $1 million to trade with, why would you want to trade your own million? Why would you want to risk your own million? The only thing it's going to cost you to trade with that firm is that basically you're going to lose maybe 20% or 10% off the profit, because normally prop firms they take 20 or 10% off the profit that you make, so you get to keep 80 to 90%. So take that million instead and use it for something else. Invest it into something else. I'm talking big numbers, but let's say it's $10,000. So invest it into something that will generate money long term, and instead just take out whatever it can be, $300, $400, $500, and buy yourself a funded account and trade that instead. So you don't have to risk your own money, right? And what types of programs are there? Now, the thing is like this, and this is an important question because a lot of people have noticed, even though they trade funded accounts, they don't really understand that there are different types of programs out there. So let's look at this. I've I've choose to compare the four that I consider be the most interesting and major companies in this industry, and that's FTMO, the first one here, MFF, my forex funds, the Funded Trader Plus, and the Funded Trader. These four. Now we're gonna compare them a little bit. So let's start with FTMO. FTMO is, I think, the biggest company in this space. It's the most established company, but they are also the most expensive company. So I don't know if they're the most expensive, but from the companies that I know, it's the most expensive. And a standard challenge on this company. Now, what we're gonna do is we're gonna compare $10,000 accounts. So we compare $10,000 funded accounts on all these companies. So if you want to buy a $10,000 funded account from FTMO, you're gonna pay $155. Compare that to, for example, MFF. My forex fund is $84. All right. Compare that to Funded Trader Plus. What is it? Oh, they don't even have a $10,000 account, and the Funded Trader is $129 US. So they are the most expensive one. Now let's look at this. So the profit target. These are the requirements that you have to make. The profit target you have to make is 10%. The overall drawdown, so it means the maximum drawdown overall that you can have is 10%, and the daily drawdown is maximum 5%. So on a $10,000 account, it's maximum $1,000 drawdown that you can have in all, and maximum $500 daily drawdown. And you have to make $1,000 in profit to pass phase one, or step one, as they call it, in the challenge. Now, remember, I told you you have to go through a challenge, an evaluation process to prove yourself as a trader so that you can trade their money. So you have two phases. Phase one, you have three phases. Phase one, you have 30 days to pass it. You have to make 10%. Phase two, you have to make 5%. Yeah, 5% on FTMO. And you have 60 days to pass this challenge. After you pass step one and step two, you get to step three, which is live money. Now you have $10,000 to trade with, but still the same rules though. You can only lose 10%. Daily drawdown maximum 5%, and that's it. The upside is if you make, let's say, 5% in profit, you can withdraw it. You get to keep 4%. 1% goes to FTMO approximately. Don't quote me on that. So my forex fund, what is the difference? My forex fund is cheaper. They have a lower profit target, 8% only. Bigger overall drawdown, 12%, and daily drawdown same as FTMO, 5%. And they have time limits set, so you have to trade 30 days the first phase and 60 days you got on the second phase. I forgot to say minimum 10 trading days on FTMO and minimum 5 trading days on MFF. So you cannot just make the requirements in the first day and then don't trade anymore. You have to trade minimum 5 days on MFF and 10 days on FTMO. Let's look at the funded trader. So as you see, by the way, my forex funds, cheaper and much easier rules to pass. All right. The funded trader, let's look at this. They have something called the rapid challenge. I choose to put the rapid challenge here because their standard challenge, like these ones, are exactly the same like MFF. It's exactly the same. 8% target, 12% daily overall drawdown, and 5% total drawdown. Now, their rapid challenge, there's a difference. Now the profit target is still 8%. Overall drawdown is only 8% instead of 12% like MFF. And daily drawdown is 5%. What is the special thing about rapid challenge? No time limit. Very important. No time limit. So if you are very active as a trader and a little bit more risky, I would say, then this one is good for you because if you pass the challenge in the first day, you're good. Or the opposite. Let's say you need more than 30 days to make 10% on your account. Then this is good for you. You have no time limit. You can take all the time you want to pass it. And no minimum trading days either. So the funded trader program rapid challenge is for anybody that doesn't want the time limit. But remember, the overall drawdown is a little bit harsher here. Now we're coming to Funded Trader Plus. Funded Trader Plus got something called the Advanced Program, and they got something called the Experience Program. Let's talk about the Advanced Program first. The Advanced Program is exactly the same thing like the Funded Trader. No time limit. So you have to pass 2 phases. There's no time limit. Profit target is a little bit harder, 10%. Overall drawdown is 10%, so you have better overall drawdown. And daily drawdown 5%. So basically, I would say almost the same thing here when it comes to the Advanced Trader Program by Funded Trader Plus. Now let's look at Funded Trader Plus Experience Program. And why I want to talk about the Experience Program, I'm gonna give it to you directly, is because this is the one I'm using and have been using for the last, I would say, half year, something like that. And it's because it's extremely unique and it suits me very good. And I think it suits a lot of people on this call, because I know a lot of y'all on this call. So what is the Experienced Trader Program? As you see, the minimum account that you can have is $12,500. That one will cost you $120, all right? $119. Profit target, 10%. We recognize that from the other ones. Now here comes the harsh thing with Experienced Trader Program. You have only 6% overall drawdown, only 6%, and daily drawdown only 3%, all right? So it's the requirements are harder and it's more difficult to pass it. You have to be very risk averse. You have to have a good, I would say, a good risk management strategy in place. What is so special about the Experienced Trader Program? This here, look at this. Single phase, no time limit. And this is what I love about it. If I pass the requirements, the 10% in one day, the account is mine. I get the live account, all right? So there's no time limit and there's only one phase to pass. For me, I love this thing. But remember, you have to have some experience. Experienced Trader Program. You have to have experience because you have to be able to handle the risk. Now you have it all the way up to $200,000. But we're gonna talk about now how big of an account you should choose. And I want to show this for y'all. This is how it looks like when you pass a challenge. You get a certificate from them that you have passed it, and this is what you want to have, of course. Now, how big of an account should you buy? So if you can afford, let's go up here and look at the prices. If you can afford a $200,000 account that costs you $1,000 approximately, should you buy it? No, not definitely. So what is the strategy? I will tell you. The thing is like this. Let's say you only have $1,000 to buy a funded account with. When you trade your normal brokerage account, you probably know and understand by now that you should trade only money that you are not afraid to lose, right? Why is that? Because you don't want to be emotionally attached to the money. When you become emotionally attached to the money, if the money you put into the brokerage is all the money you got, you're going to be very emotionally attached, because if you don't make a profit, or if you blow up the account, you cannot pay the bills. Similar strategy goes to funded accounts. If you have $1,000 to buy an account with, don't buy a $200,000 account just because of that. Because you want to, if you do that, if you start to have a drawdown, you're going to be afraid of blowing the account, and you're going to be afraid of losing the account, and that will make you emotionally attached to the account. And what will happen then? You will trade emotionally, and it's a bad spiral that goes to a no good place. So what should you do? I recommend that you should split it up in at least 3. So you have at least 3 tries. so that you know that if, let's say you split it up 3 times, uh, let's say you buy $25,000 accounts, then you can have actually 5 tries because you have $1,000. So you know now when you're buying this when you're doing your first try, that if you fuck this one up, you have another try and then you have another try. Doesn't mean that you have to go bananas and trade reckless. No. Discipline, stick to your strategy, do what you're supposed to do. But you don't have to be emotionally attached now to the trading. All right? So this is rule number 1. Trade with money that you can afford to lose, and buy an account that you can afford to lose. Okay? Second thing, of account size. How big of an account size? Now, trust me on this one. I've seen this a lot because we are in teams. Most of our y'all here are either my team or in Superhumans. And I've seen it after a couple of years in the team that when people take too big accounts, they get emotional on that as well. Because what happens? Let's say you take a $200,000 account. You have never had this type of money. The biggest money you had was maybe $5,000, let's say. And suddenly you have $200,000 and you pass the challenge. You come into the live account. You know now that every percent you make here is $2,000. Every percent. If you make 10%, that's $20,000. That's half of a year's salary for a person. If you make 1%, that's a month's salary for a person. So it gets very difficult not to get emotional about it. So that's thing number 2. Don't trade to big numbers. Scale it up. Be patient with it. Don't be greedy. Scale it up. Trade money that is not a fantasy number for you. All right. So if you make 10% on $25,000 account, that's $2,500. That's a month's salary, but that's on 10%. So that's what you should do in about a month. So you're basically making a month's salary on this. So it becomes more reasonable, the numbers. All right. So choose an account size that is appropriate for you. All right. With that said, let's proceed. Let's talk about risk management. Now we're coming to the important stuff. And I'm telling you, all of y'all that already know funded accounts and have been only listening with one ear until now you time to open the other ear and listen with 2 ears, because this is important. Risk management. How do you treat risk management when trading a funded account? So we're talking about $10,000 accounts here. If you can have a $1,000 draw, 10% drawdown on the $10,000 account, that's $1,000 that you can lose on the account before you breach the rules and you lose the account. So in your risk management, you don't count $10,000, you count $1,000. All right? This is what you have to go from. This is your starting point, because this is actually the money that you got to trade. This money you cannot lose $90,000 or $50,000. Oh, sorry, $5,000. You can only lose $1,000. This is the money you have to trade. My risk management, now everybody can do their own risk management. Some people want to be more conservative, some people want to be more risky. My risk management is 1% maximum, and it's very seldom I do it. 1% maximum risk in one trade. Okay, and this is when I'm trading a funded account. When I'm trading a real account, not a funded account, my risk management is 3%. Now 1% only, because we only have 10% of the account to play with. If you trade with a risk management that is 1%, you can lose 10 times. You can afford to lose 10 times on the account before you blow the account. 10 losses should be more than significant enough for you to get the wins that you need to get to pass the challenge and get the live account or come to the next phase. All right. Now I'm gonna show you how you calculate the risk. So let's get out of this presentation and let's go to my FX book. Very good site. If you don't know it from before, you should check it out. My FX book. You can connect it to your broker and track your results and everything here. All right. So yeah, I already wrote it down. let's do it like this. So, okay, let's say we're trading Euro USD. Account size $10,000. Our risk, what did we say? 1%. Let's say you get a trade from Eminus or Prosperous and the stop loss is 30 pips. 30 pips stop loss. Boom. Risk ratio, trade size lots in this case. Yeah. So if you're trading a $10,000 account and you have a 10% drawdown limit, you have a 1% risk ratio, and the stop loss is 30 pips. You can, the lot size you should use is 0.33. So 0.33 is your lot size. Let's say there are 3 take profits. What do? You split it up in 3. So you open 3 trades that are 0.11, 0.11, 0.11. That becomes 0.33. Okay, so this is how you need to calculate your risk. Always be aware of your risk. If you do that, I don't want to say I promise you, but I'm very certain that you will be profitable and successful in your trading. Stick to proper risk management, stick to your rules, stick to your strategy. All right. Now we come to the second thing, talking about risk management, and that is your game plan. Let's make this big and nice again. So what is your game plan in this? First thing you need to do, read the rules thoroughly, like really read them and take notes. Why is that? It's because different prop firms have different types of rules, and some of these rules, they can be a bit shady. Like they are designed for you to fail, because how the prop firm makes money is either that you are a very good trader and they get to keep 10 to 20% of the profits you make, or that you fail before you even get to the live account and they make money on the fees that you pay. And I will tell you, I think it's 80% or 75% don't make it to the live account. They fail. So they make a lot of money on these fees. And then here's some other stats for you, and we will talk about that. From the people that make it to the live account, 80% blow their live account the first try. And we're going to talk about that. So why do people blow their accounts when they get to the live account? Because they do it because of the psychological barrier. It's a psychological barrier. And the thing is like this. Let's say you have a $25,000 account. You're trading. It's a demo money. It's a challenge. You have to pass it. And if you don't pass it, nothing really changes. Suddenly you pass it. Now it's live money. Now you know that every percent that you make in profit on that account is money in your pocket. It changes the game. No, sorry, it doesn't change the game. It changes your approach to the game. All right? It changes your mindset, but it shouldn't. The game should be the same. The game plan should be exactly the same as it was when you did the evaluation process. So that's why before you even start the evaluation process, have your risk management clear. Have your trade game plan clear. How you trade, what type of strategy are you using? Don't jump between different strategies all the time. Stick to one strategy. And also this here. Are you increasing risk exponentially? Now, what do I mean with that? This is a strategy that I use. So here's a gem for you. What I do is this. Let's say I have a $1,000 account and I make $100 on it. That's 1%. So now I have 1% less to make. I will increase the risk a little bit. A little bit. When I make 4 or 5%, I will increase the risk a little bit. But here's the thing though. When I start from $10,000, and that is from zero, I don't have 1% risk. I have 0.5% risk because I want to get a margin first. I want to get ahead a little bit first. When I've come to that first percent, I increase my risk to maybe 0.7%. When I come to 3, 4%, then I increase my risk to 1%. I never go above 1%. So what I want to say is like you get use a good game plan for y'all to use that I use myself, and that's worked very well for me, is to use a lower risk in beginning to build up some margin on your account, some profit margin, so that you can afford to lose a little bit if that happens. And use maybe a 0.5%. And then when you have gained maybe like 3%, then you can amp it up to like 1%. But don't go above 1%. All right. When you come to the live account, the psychological barrier, as I said, stick to the game plan, same game plan. If you're using exponential risk, use it. Do the same thing. Don't change anything. And then comes the thing, what do you do when nerves kick in? Let's say you come to the live account and you're feeling nervous about it, you're feeling anxious about it. What should you do? Don't trade. Now, it's difficult. I know you're eager, you want to trade, I've been waiting for this. Don't trade. You can wait 1 day, 2 days, 3 days. You don't need to trade now. This is real money. If you're making money, if you're making percentage here, you're getting money in your pocket. Treat it with respect and it will respect you back. Trust me on that. So when nerves kick in, don't trade, take it easy, talk to somebody. If you're in a team, talk with some mentors, some of the leaders, something, and like figure out a game plan. Be sure of your thing before you start to trade. All right, you need to be confident when trading. Last point, open another account. So what do I mean with that? When you have gotten to the live account, this is my game plan I'm giving you now. So when I come to a live account, what I do is I open a new challenge directly. Why I do that is because I think I've had 6 funded accounts in total, and I blew 4 of them. I have 2 right now that I'm trading. So how can I blow them? Because sooner or later you're either going to be overconfident, or you're going to go on a losing streak. Something is going to happen, or you're going to breach a rule. One time I lost an account because I breached a rule. I forgot to put the stop loss. I was scalping and I forgot to put stop loss. That's what I'm telling you. You must read the rules thoroughly. Understand the rules. I forgot to put stop loss. I lost the account. I got a new account for free, but I lost that account. So therefore, as soon as I have a live account, I open a new evaluation account directly, so that I can start, putting some long-term trades there on the sides. You cannot put the same trades, so you have to use different trades, because that is also a rule. I don't know exactly why, but put some long-term trades on the new account, let it run. Don't stress it. Let it do its thing, because you got your live account to focus on. You got money to make now, and that's it. All right. So with all of that said, that's basically it for when it comes to funded accounts. Something that I can add to it that is actually not something that I can add, but I really should add, that is very important, that I think most of y'all here on this call have, is the proper guidance and information when trading funded accounts. So as I said, let's say nerves kick in, you need somebody to talk to, you need to understand what's going on, you need somebody that can give you, that has experience, that can give you advice. So make sure that you always have the proper guidance, mentorship, and information. And for y'all that are not in our teams, if you're interested in learning more about trading, funded accounts, get access to AI tools and trading and all of that, link is in the description box below. For y'all that want to trade, Funded Trader Plus, the prop firm that I recommend, link in the description box below. You get 10% off. So 10% off when using the coupon code Prosperous. So use the coupon code Prosperous, you get 10% off. Link in description box. With that said, guys, I hope you got value out of this. That's it for today. And I wish you guys a blessed evening. Stay prosperous and trade safe, right?